Good day, ladies and gentlemen. So today I want to talk about trade management. One thing I've come to realize is that most people confuse risk management and trade management. They're actually two different things. Okay, risk management simply has to do with your position sizing, the lot size you are using, ensuring you don't risk more than 1 to 3% of your capital per trade, and basically has to do with everything you do to protect your accounts in order not to blow it. Okay, that's more of risk management. What's your risk to reward ratio? So that's where risk management is. Then trade management, on the other hand, has to do with the things you do while you are trading, when the trade is on. Okay, when you're on a trade, be it a buy trade or a sell trade. So the things you do when you are on an active trade, that's trade management, and I'll break that into two. There are actually two sides to it. The first side is what I call the downside risk, and then the other one is known as the upside potential. So the downside risk has to do with the activities you carry out, to ensure that you do not you do not lose much when you are trading. Okay, so that is further broken down into two. Okay, you have the break-even principle, whereby once your trade has moved to a certain level, you move your stop loss to break even. Then you have the half risk principle. Okay, so you basically half your risk. Okay, so let's say you planned to risk 3% on a particular trade. That's what you want to risk. You are willing to lose 3% of your bankroll, 3% of your deposits on a particular trade, for example. When the trade has moved in your favor to a certain extent, you can move your stop loss to a position that you will just be risking about 1.5% instead of 3%. Okay, so that way, if the market goes against you, you will be losing 1.5% instead of 3%. All right, so that's that about that. There's something some traders do that actually surprised me. For me personally, when I'm trading, if a trade has moved up to 50% of my take profits direction, it is very difficult for me to allow that trade come back and stop me out at break even. No, if it has moved up to 50%, I should be able to secure some profits. Some traders will be trading, their profit target is probably $100. Market has moved up to $50. They have moved their stop loss to break even. The market will still come back to their break even and stop them out without them securing even a single dollar. Okay, that's not the best way to go about it. And that brings me to the next one, which is upside potential. Okay, and I would like to show you some things on this chart when I'm talking about the upside potential, and that has to do with locking your profits and ensuring you take something from a trade. Okay, instead of just waiting for a loss or break even. All right, now let's say you are trading and you enter the trade around here. You know how to do sniper entry. Okay, and you entered around here in order to ride this particular trade upward. You enter the buy trade and it's moving in your direction and you're happy. Fine, price is moving in your direction. You need to look to the left to know the areas of potential reversal. All right, we can see price was moving in a downtrend before. It was moving down. This is a lower high right here. This is a lower high. Okay, and this is a lower low. All right, so showing that price is moving downwards. Now let me get an horizontal line. I will draw an horizontal line across this lower high right here, somewhere around here. Can put that here. Okay, then I'll check when price comes close to this area. You can see, let me take this down a bit. Okay, you can see that when price got close to that region around here, what happened? There was a reaction downwards. Do you see that reaction? There was a retracement downwards. So when price gets to that point, I'll be keen to really check what is going to happen. This reaction, I'll really check it to ensure that it does not turn into a full-blown reversal, and if it does, I'm getting out of the trade. Okay, but it turned out to be a retracement and price broke that level of resistance. So you need to know this level of resistance, so that a trade where you would have made some money will not end up taking you to stop loss or breaking even. All right, so you need to take messages from the market. You need to be dynamic, understand what the market is telling you, and react accordingly, you know. So I read a book some time ago. I can't remember the title of the book, and in that particular trading book, it says that amateur traders try to predict the markets while professionals react to the market. So this reaction is what I'm talking about now. You try to understand what the market is telling you, then you act accordingly. Okay, so the next what's it called, resistance point is this other lower high that is here, but fortunately price just pierced through that one and did not show any points of that one trying to hold it down, so it kept moving up. So you need to know all these things. Then you come here. This is another level where price can potentially react. This level right here, let me see if price got there. Okay, price broke through. Price actually reacted at that point. You can see this red candle right here, as though it wanted to come down, but it did not. So where I'll be looking at in a situation like this, okay, since this level has been broken, let's say there's a line here, you can see it's an uptrend. So you have higher highs and higher lows. So this is like more or less like an higher low. Okay, I do not expect price to come and break this higher low, so I'll be looking at that red candle that's formed above. If it comes down again and breaks this, I'm getting out of the trade. So that's part of what I'm talking about. You need to be able to reduce what's it called, to you know, take your profits when you notice that the price wants to reverse, and you also need to be able to move your stop loss to break even, or at least half your risk, you know, just in case. Because one thing statistically you would find out that people that have their risk, down the line it will be easier for them to cover up the losses compared to you that you just leave your stop loss position for it to be hit every time, even though you have seen clearly on the chart that you are actually wrong and the price is moving against you. Okay, it's moving against your direction. Why not just half your risk and, you know, be in a better position to cover up the losses down the line? So if you have gotten any value, please subscribe, turn on the notification bell. I'll see you in the next video. Thanks for watching.